I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob, and happy Labor Day.
Yeah, it's coming up. There's the big Labor Day around the world, I suppose, and doesn't matter whether you spell it L-A-B-O-R or L-A-B-O-U-R, it's still Labor Day.
Bob, the Canadian dollar is surging. They anticipate a rate hike next week. Is that likely to happen?
Well, I can't comment on rate hikes because I think central bankers are all mad. But yes, the Canadian dollar is up because you've got the strength in base metals continues. And that's going to go on for, a number of weeks yet. And then also the U.S. dollar weakened because their Treasury Secretary guy in München came out yesterday and said that, a weaker dollar is a good idea. Now that may be playing to the NAFTA situation because the trade agreement between Canada and the U.S. and Mexico, it was designed by bureaucrats, for bureaucrats, and they left in that each central bank could continue with the cheat of depreciating its currency. Now what has happened in the scheme of things is that the U.S. central bank has been unable to depreciate its currency to any degree compared to what's happened with Mexico and the Canadian. So over the period, you had 7 or 8 years ago, the Canadian up to 105, and it's come all the way down to 72 or something recently, and then here now up into the 80s, maybe 81. So, but if Canada really wanted a free trade, they should just unilaterally declare free trade in everywhere and then eliminate the cheat by depreciating the currency relative to the U.S., go to a currency board, and then it wouldn't be perfect, but it'd be a whole lot better than this situation. And, of course, this is where the Americans got screwed with the currency depreciation, and hopefully maybe this little bit of stuff by Mnuchin is to set things up so that as part of the new NAFTA agreement that the Bank of Canada doesn't get to cheat. Now, that would be a good thing.
So really, the Canadian dollar should be pegged to the U.S. dollar, and then we don't have to worry about $8 cauliflower in the winter?
Oh, yeah. You got all kinds of friction in the system where many business do try and hedge, and that's a cost. And if you just got it pegged at par, hey, it's very good. And Canadian business people really do not need the assistance of a weaker currency. Canadian business people can be competitive most anywhere, and one of the things that helps keep things competitive is not having the currency cheat. So it can be done, and it should be done, and a currency board is the right description for it. So hopefully something heading in that direction can come out. Then also there's going to be the problem with all those damn full marketing boards in Canada, of which, when you think about it, whether it's an egg marketing board or a dairy marketing board, what is the Bank of Canada but a money marketing board? You know, the whole lot of it should be thrown out. So we live in exciting times, and maybe these times could become hopeful that rational processes in the marketplace are allowed to flourish. But anyways, the Canadian has popped up here mainly because they're getting a pretty good move in the base metals, and it's continuing this week. So hey, happy times.
What about people who say you should buy local at your farmer's market?
Oh, yeah, you can do that during the season. But there's quite a political movement about buying locally because part of that's driven by the hatred of fossil fuels. So they figured if you buy locally, you're not transporting things that far. But, that's sort of airy-fairy stuff. The best thing is to let a free market determine the price and the source of the stuff you're buying, and everybody gets to sell their produce or their labor at the highest possible price, and everybody gets to buy things at the lowest possible price, and that difference between the bid and the offer is the market. So the longer term, I think things are going to get more and more practical regarding policy making, central bankers, and all that sort of stuff. The next credit contraction is going to instruct ordinary taxpayers that it's very expensive to allow their central bankers and economists to run a continuous experiment. All you have is a bunch of intellectuals who have this fantasy that an economy can be managed, and they need to do it through currency depreciation and fiddling around with interest rates. So I think there will be a contraction at some point, and that then I think will put the nail in the lid of the coffin on the idea of successful intervention. It's been nonsense now. If you use the U.S. Central Bank, the Federal Reserve, it was the promoters behind it originally claimed that with the Fed there as a lender of last resort, it would prevent a single failure, but then would spread to other failures, and then, of course, whenever you have financial catastrophe, you end up with a recession. So the plan was you would avoid catastrophes and you would avoid recessions. Now, since the Fed opened its door in January 1914, I think it's now up to about 19 recessions. So, hey, what does it take to finally realize that a theory is not working? But when you got a priesthood operating and doing mumbo-jumbo, anything's possible. So, anyways, but let's move on to other things.
And we'll do that, Bob, right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Welcome back. We're chatting with Bob Hoye. Bob, the price of gold continues to climb right now. It's at $13.29 at the time that we speak. Is gold going to continue to rise?
Well, it's been acting well, along with base metals and along with the weaker dollar. Now, we thought that the U.S. dollar would kind of find some support at the 92 level, but this week it got below. But that was with the news of the Secretary of Treasury saying a lower dollar would be good. And so technically I think we're getting quite oversold, and it should take a few weeks to bottom, and then you can start an uptrend in the U.S. dollar index. Now that would really, really shake things up. But this, of course, you've got a good move going on in base metals. The crude oil market is so screwed up, it's hard to tell what it's going to do, but it's not been acting well. But nonetheless, we know that for crude oil, there's seasonal lows that one has to face out in December or January. And the next slide down in crude oil could be quite devastating to the industry. But then, you see, whenever you've got at least some strength in commodities, particularly, as I say, the base metals, that is usually associated with a weaker dollar. So somewhere maybe in the next three or 4 weeks, the move in base metals could culminate. And then also that would be with gold. You see, both are sort of tied to a weaker dollar. So gold's been acting well. My colleague Ross Clark has been on it. And I've been a little chary about chasing up the gold stock prices, mainly because I think the bull market in the big market for stocks is getting close to culminating. And if you have a downdraft in the big stock market, it would take the gold stocks with it, but that would then set up an ideal buy for the gold and precious metal sector. But that's yet ahead of us. And of course, we're looking at our technical analysis to help spot that opportunity. But in the meantime, we do have a firmer Canadian, a weaker U.S., and better price for gold and silver, as well as for base metals. And it could culminate somewhere in the next 4 or 5 weeks.
We'll have more with Bob Hoye right after this.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're talking with Bob Hoye. Bob, Canada had a 4.5% surge in the GDP in the second quarter. Is that kind of growth going to continue?
Well, yeah, I don't know. I don't follow GDP all that much, but things on the business side are positive. What is interesting is when you're in an age of inflation in financial assets, which we're in since 1982, what can happen is when the inflation in financial assets gets overdone, and if you're looking at stock market, yes, overdone at about the right time, going into September. You're looking at long-dated treasuries. They got overdone earlier in the week. And then also we're looking at low-grade stuff, junk or high yield, and it's getting a little overdone. So if you have, I know another thing to put in here is that since the early 1700s, and the first big financial bubble blew out in 1720. And then when I was doing my research decades ago, I realized that a big boom in commodities had completed in 1711, 9 years earlier. So I thought, oh, that's interesting. Why don't we look at the big stock market bubble in 1929? And then look backwards, and sure, there was a huge, that one was really big, commodity boom concluded in 1920. So that's the 9 years. And then I found the bubbles in 1873 and 1825, then 1772, and each was preceded 9 years earlier by a huge boom in commodities. So the big boom in commodities blew out in 2008. Remember when crude oil was up to $147? And here we are, 9 years later. Now, if the stock market for this year had been just accomplishing the ordinary, like a rising trend, no excesses, then we wouldn't be looking at this model. But in the 9th year after a big boom in commodities, we now have had highly speculative action in the stock markets. So then this model has some probability of working out, and the model is saying that 9 years after the big commodity boom, you would have the climax on a great financial bubble that would end it for quite some time. So my historical side is fascinated by this, and we'll just see how it all works out. But as I want to emphasize, that if there was no speculative action this year, then that model would not be effective. But with speculative action, what does one do? You can say, okay, the path so far is heading towards a contraction in the fall. Now, there is no guarantee that financial history will remain in that path to a contraction. But then again, there's no guarantee that it won't continue in the path. And so this is why we're monitoring the things very closely, credit spreads, the yield curve, and just plain short-dated interest rates with the T-bill and the 6-month T-bill going down. That's an indicator for us. So we'll just, the next 4 or 5 weeks will be very interesting, Jim.
Your financial advisor should be on their toes.
Oh, yes. And what helps is to have a very good history of the financial markets and a very good technical reading on those financial markets to determine. And what we say now is, hey, is the stock market up when it should be? Yes, because we're looking for a high for the New York market in September. So it's up when it should be. Are there signs of speculation? Yes. And how good is the fundamental story behind it? Well, the fundamental story, it has been Donald Trump bringing in a pro-business administration, which he has, but the lowering of taxes and getting rid of draining the swamp and reducing the bureaucracy is still all ahead of us, and it's not happening yet. So I think the credit markets will overwhelm the fundamental story about a pro-business administration.
Bob, have a great long weekend.
You too then, Jim, and thanks very much.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. You can forward questions for Bob or for the show to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.